So,
open?
oh shit, I guess the market just opened. But anyways, so yeah, this was on the euro. It's the 6E because it's futures. And yeah, it was on the 15-minute time frame where I took this trade. So first, I obviously had a bullish bias going into that, and I'll show that why I had that in a minute. But we could see, okay, this is the ages session right here. We consolidate, okay, so that means the bottom here is a good grab of liquidity. But as you can see here, if we go into the 30-minute time frame, we have a fair value gap over here. So I was actually waiting for a break into this fair value gap in order to take a trade. So we took out this agent session right here and we go up initially on the day, and we don't reach the liquidity that I'm aiming for on the day. So that means it's still valid for me to take a long because I know that the target of the day hasn't been met. And now we dip out here, and obviously since I'm bullish, this 30-minute fair value gap is used as fuel. So I consider this okay. Now we reach down here, took out this liquidity, and reach into the fair value gap to generate more fuel in order to go to the buy side. So yeah, now on the execution time frame, I can mark out the 9:30 here so you guys can visualize what I'm going on the charts. So that's the 9:30 over there. Uh, so opens here, okay. I'm like, okay, we just took out liquidity and entered the 30-minute fair value gap. We go up pretty solidly here, and in the next candle we leave a fair value gap. I didn't mark really a break of structure, but as you can see, obviously we had a market structure shift either here or here, wherever you want to label that as a market structure shift. And obviously, I can show you on the smaller time frames, we had plenty of market structure shifts over here. So that combined with our bullish bias made this fair value gap a valid one to take. So I enter in the entrance of the fair value gap, not the consequent encroachment, because again, this is one of the breaker structures here. So I'm like, okay, we are ready. Went back into this order block, breaker block, whatever you want to call it, and into the fair value gap, as well as the Asian session over here. So if you go on a higher time frame, like let's say the 1 hour, uh, okay, sorry. Well, the 1 hour would be over here, so it'd be above the fair value gap. But you get what I'm saying. There's a lot of indications, so a lot of PD arrays that will lead us to go higher. So I don't want to miss out the trade by just getting wicked in and then it goes out without hitting consequent encroachment. But obviously, if you waited for consequent encroachment, you guys would have also made money on this trade. Now for the stop placement, I put it below the second candle, the fair value gap. A lot of times I put it lower, like maybe third candle in between, some type of breaker over here. But this is when the 1 hour actually came clutch as well, because as you can see, all the bodies closed above this line over here, and it perfectly matches up with the bottom of the second candle, the fair value gap. So I thought this is just a perfect stop placement. We get obviously a huge, like a bigger, way bigger trade since our stop was tighter. And yeah, and I think it was safe enough as well because this order block over here, or whatever you want to call this PD array, well, I guess not really a PD array if you consider this as the breaker, but again, on the 1 hour and other time frames, it just all leading to this being a pretty safe stop. So yeah, but I wouldn't be mad if some of the people that are watching this video, if you guys were learning from my type of trades and you guys put it a bit lower to be safer, that's fine. You would have got like 1.8 over here. If you put it here, 2.25, but I got a 2.5 risk to reward. And obviously for the targets, it was pretty clear, bro. The only target that's pretty reasonable is this, unless you had a lower stop. And in that case, you could have targeted up here, so you could have got a bigger trade over here. It would have been a 2.5. So yeah, but I got a 2.5 with just this because of my stop. But yeah, you could have done that. But also, I just want to show you I had this trading view chart because we get the standard deviations here. You could have targeted two standard deviations as well of the Asian range. So that could have been a nice target as well. But ultimately, every target you would have realistically gone for just got fucking railed, bro, because it was hella bullish today. And that leads me into the bias. So let me go on the trading view charts. Lucky more like nicer, I guess. But yeah, so it's pretty clear of a bias, but basically what it was we're going up like on the higher time frame, we're going just bullish for a while now since the start of the year. And we just reacted off this order block and it held. So yesterday we had a nice bullish rejection off here. So it's pretty clear that we're gonna eventually want to get these highs over here. So today was just a clear bullish day. And another thing for you guys, just before we end this video, I was actually thinking initially on the day to put a limit order here overnight, just in case we tap this fair value gap and we just shoot up before the 9:30 open. That's another thing you could do if you're very confident on your bias. But obviously it's risky because you don't get to manage the position, and putting your stop is a bit tricky. You would probably put it lower here and then target some sort of area over here. But when I was marking that out, like at midnight when I was thinking about it, it was around a 2.5, maybe a bit less or something around that, a bit over two risk reward. So it would have turned out the same way.